Welcome back to the Deep Dive. Hope you're having a fantastic start to your week. It is Monday, January 26, 2026, and if you've been following the financial news, you know the vibe right now. We are right in the thick of earnings season.
Oh, yeah. You can practically feel the caffeine and anxiety in the markets.
Exactly. Everyone's watching the tickers, waiting to see who survived the last quarter. And today, we're going to focus on an old acquaintance, almost a friend of the channel at this point.
Chipotle Mexican Grill.
Chipotle Mexican Grill.
It really is a staple, isn't it? For, lunch breaks and for investment portfolios.
Yeah.
It's one of those companies everyone thinks they get because they eat there.
Exactly. We've all stood in that line. But if you've been watching the charts, you know the stock has been, clawing its way back up on the exchange recently. But here's the thing. Earnings are just around the corner. They present their Q4 and full year 2025 numbers on February 3rd.
Right.
So it feels like the perfect time to update our mental models on what the company is actually up to, what the market is watching, and frankly, what Wall Street is discounting right now.
It is a pivotal moment. The big question we're trying to answer today is whether this recent bounce we're seeing is a true recovery or
just a blip.
Or just a dead cat bounce, yeah. A momentary thing before reality sets back in.
Right. So our mission today is to dig into the leadership changes, the menu innovation, which involves some very specific chicken, and getting into sci-fi territory, robot avocados.
The robots are definitely the highlight for me.
Okay, let's unpack this. Let's start with the big picture because, to be honest, 2025 wasn't exactly a fiesta for Chipotle, was it?
No, it was definitely not a fiesta. It was more of a severe hangover. If you look at the context of the last year, it was brutal. We saw shares fall anywhere from, say, 39 to 45% during 2025. At one point, the stock hit a 52-week low of $29.75.
Ouch! Under $30. That feels psychologically heavy.
It is. And to put that in perspective, while the S&P 500 was chugging along, doing its thing, Chipotle was significantly underperforming the broader market, especially over the last 6 months of 2025. Investors were really losing faith. It went from being a darling of the market to a huge question mark.
But looking at the screen this morning, the mood seems to be shifting. It doesn't look like a disaster zone right now.
It is shifting. As of today, late January 2026, the stock is trading around $40.87.
Okay.
That means it's up about 10% just year to date. And here's a fun stat for you. The 10% gain is actually outpacing the S&P 500's 1.8% gain so far this year.
Wow.
So the momentum is completely flipped.
That is a serious rebound. But is Wall Street actually buying it, or is this just retail investors, buying the dip?
The big institutions are starting to come around. Piper Sandler, for instance, just raised their price target to $47 up from $44 just a few days ago on January 23rd. There's this cautious optimism building for the first half of 2026. They think the top-line revenue might surprise people.
Okay, but we have to address the elephant in the room. The reason the stock arguably took such a hit last year wasn't just about how many burritos they sold. It was the leadership shakeup. Brian Niccol left, and people really liked him, right?
They loved him. He was the turnaround artist. He took Chipotle from its food safety crisis years ago to massive highs. But then he left in August 2024 to go fix Starbucks. And that left a massive void. The market hates uncertainty, and losing a superstar CEO like Niccol created a ton of it.
So investors were asking, is the magic gone?
Pretty much. So who is steering the ship now? Do we have another superstar, or what's the plan?
The dust has finally settled on that. Scott Boatwright is now the permanent CEO. He was interim for a bit, but now it's his ship.
And this is important. He's not a celebrity CEO brought in from the outside. He's an ops guy.
An ops guy.
Yeah, formerly with Arby's, but he joined Chipotle back in 2017.
An ops guy. That sounds less flashy than a visionary. Is that what they need?
In this climate, absolutely. He knows the kitchen. He knows the assembly line. It's a continuity play. The market was nervous about Niccol leaving, but they're starting to trust Boatwright because he's kept the team intact. Eileen Eskenazi is now Chief Legal and HR Officer. Stephanie Perdue is stepping in as interim CMO. It signals stability.
So we have a steady hand at the wheel, the stock is bouncing, but let's get real for a second. Stocks don't drop 40% just because a CEO leaves. There had to be something wrong with the business itself. Why did they bleed so much value in 2025?
You're right to be skeptical. The leadership change was just the spark. The fuel was the fundamentals. It really comes down to two things: traffic and inflation.
Traffic meaning foot traffic, like actual bodies in the store.
Exactly. Let's look at the stats from Q3 2025. This is the canary in the coal mine. Comparable sales were up a tiny bit, 0.3%. But here's the scary part. Transactions The actual number of orders fell 0.8%.
Wait, hold on. How can sales be up if fewer people are ordering food?
That is the magic and the danger of price increases. All the growth came from higher prices or check size. People were paying more per burrito, but fewer people were coming in to buy them.
That sounds like a death spiral. You mask the fact that you're losing popularity by charging your loyal customers more. Eventually, you run out of loyalists.
Precisely. It's a dangerous game. Management admitted they are facing persistent macroeconomic pressures. And when you dig into who is stopping their visits, it's the lower-income consumer. Households making under $100K a year make up 40% of their customer base, and that demographic is pulling back. Hard.
They just don't have the disposable income for a $15 lunch right now.
Not at all. Which brings us to the other side of the equation. If customers are broke, Chipotle's costs aren't going down either, are they?
Far from it. Inflation is real, and it's sticky. They're expecting mid-single-digit inflation for 2026. Beef prices are up significantly. And then you have the tariff situation.
Oh, right, the tariffs. We talked about this back in April 2025. How bad is the exposure there?
It's hitting them right where it hurts. Mexico supplies something like, 51 to 69% of U.S. avocado imports, plus tomatoes, packaging. Tariffs drive those costs straight up.
So the logical move, or the move companies usually make, is to just pass that cost on to me, the consumer. Are we going to see another price hike? Are we looking at a $20 burrito soon?
Surprisingly, no, or at least not fully. Management has signaled they do not plan to fully offset this inflation with price hikes in the near term.
Really? That seems charitable.
Or desperate.
It's strategic terror. They are terrified of breaking the value proposition. They know that 40% of their customers are already tapped out. If they raise prices again to cover the tariff costs, that traffic drop of 0.8% could turn into 5 or 10%. So they are choosing to eat the cost. But if they eat the cost, their profits shrink.
Exactly. Margins are getting squeezed. Operating margin dropped to 15.9% in Q3 2025, down from 16.9% the year prior.
So they're trading profit margin for market share right now. They're basically saying, we will make less money per burrito just to keep you coming in the door.
That is a tough spot to be in. Squeezed on costs by the economy, squeezed on pricing power by the consumer. It feels like they are stuck between a rock and a hard place.
They are, and that's why this deep dive matters. Because they have a specific plan to fix it that involves completely changing how the kitchen works and how they lure you in. But before we get to the robot avocados,
which I'm dying to talk about. But yes, before we get to the tech and the new menu items, I want to take a quick second to talk to you, the listener. If you like what you are hearing today, we invite you to subscribe to the channel, leave a like, and comment on what topics you would like us to address in future episodes.
Your feedback really shapes what we cover here. We do read the comments.
Absolutely. And in the description of this deep dive, you will find a PayPal link in case you want to support this project. Your contribution helps a lot so that we can continue creating content like this. We don't ask for more than the cost of a coffee. Thank you for your support.
Okay, bills paid. Let's get back to the strategy.
So, back to the fun stuff. If they aren't raising prices and they are losing foot traffic, they need a way to get people back in the door. How do they do that? It sounds like it involves chicken and honey.
Menu innovation is the new transaction driver. Since they can't rely on just raising prices, they need buzz. They need a reason for you to stop going to Sweet Green or McDonald's and come back to Chipotle. And the star of the show right now is Chipotle Honey Chicken.
Honey chicken, is it actually working or is it just a gimmick?
It's huge. It was the top-performing limited-time offer, we call them LTOs, in their test markets in Nashville and Sacramento. The data is incredible. 53% of buyers said the item influenced their decision to visit. But here's the key stat that Wall Street loves. 48% of the people who bought it were lapsed customers.
Lapsed, meaning people who had ghosted Chipotle.
Exactly. People who hadn't visited Chipotle in 12 weeks or more. This chicken brought them back from the dead, essentially. That is the holy grail for a restaurant chain reactivating customers who had drifted away.
That's powerful. And I heard something about sauces, too. Apparently, Gen Z is obsessed with sauce. I feel like I'm seeing dip hacks all over TikTok.
It's a massive cultural shift. There's a statistic that blew my mind. 92% of Gen Z say they would visit a restaurant just for a sauce.
Just for a sauce? I mean, I like a good ranch, but I'm not driving across town for it.
You might not, but the 20-year-olds will. It's dip culture. So Chipotle is rolling out red chimichurri, roasted garlic, cilantro, chili peppers, and adobo ranch.
Adobo ranch sounds like it was lab engineered to sell.
It probably was. And this signals a major strategy shift. They used to do maybe 2 LTOs a year. It was a slow, steady menu. Now they are moving to 3 or 4 per year. They need to keep the buzz high constantly to keep that foot traffic moving. They can't afford a boring quarter.
So the strategy is better chicken and trendy sauce to bring the bodies in. But we still have that margin problem. If they are eating the inflation costs, they need to make the burritos faster and cheaper to survive.
This is where the gadgets come in, right?
This is where we get into operational efficiency. To fix margins without raising prices, they need speed, what they call throughput. In the restaurant world, time is literally money. Enter the robots.
I need to know about the avocado robot. Please tell me it has a cool name.
It's called the avocado.
Of course it is. I hate that. I love that name. But is it real or is this just PR to make them look high-tech?
It's very real. It's a Kabotic prototype that stands for collaborative robot. Here's the problem it solves. Making guacamole is a nightmare for labor. It takes 50 minutes to prep a batch by hand.
The avocado cuts, cores, and peels avocados in 26 seconds.
26 seconds per avocado.
Yes. And think about the why here. It's not just speed. It's waste reduction. It's preventing repetitive stress injuries for workers who are slicing hundreds of avocados a day. It lets the human employees focus on the mashing and seasoning, which is the art part, while the robot does the dangerous, boring knife work.
Okay, I can see the value there. But it's not just avocados, right? I read about something called the augmented make line, which sounds like something from a cyberpunk novel.
This is the hyphen system, and honestly, it's more revolutionary than the avocado bot.
Yeah.
Picture the assembly line where they make your food. Usually you have staff trying to build a burrito for the guy standing there while also looking at a screen and trying to build a bowl for a DoorDash order. It's chaotic.
It's the Chipotle panic. We've all seen it in the employees' eyes.
Exactly. So the hyphen system is like a bunk bed. On top, the staff builds burritos for the in-store guests. But underneath the counter, literally below the surface, an automated system is building bowls for digital orders.
So the bowl moves along a track underneath the counter and gets filled by machines.
Correct. And this solves a massive problem. 65% of their digital orders are bowls. If the robot can handle the bowls underneath, the humans can focus entirely on the customers in the store. It frees up the hospitality aspect. No more ignoring the customer to rush a digital order.
Is this just testing, or are we going to see this at my local Chipotle soon?
It's moving from labs to restaurants. They've been testing in Huntington Beach and Corona del Mar. But it's not just the flashy robots. They have something called HEAP.
HEAP. That sounds less exciting.
It stands for High Efficiency Equipment Package. It's less sexy than a robot, but maybe more important immediately. It includes dual-sided planches grills that cook on both sides at once.
Like a giant industrial George Foreman grill.
Exactly. It cooks chicken and steak in half the time. They're rolling this out over 3 years. The goal is simple. Faster lines equals more money per hour. If you can shave seconds off every transaction and cook the chicken twice as fast, you increase the volume. That volume helps offset the margin squeeze we talked about earlier.
So the plan is, lure us in with honey chicken and then process us through the line at record speed using robots and dual-sided grills. It's like turning a restaurant into a high-speed manufacturing plant.
That is exactly what it is. It's manufacturing efficiency applied to fast casual dining.
But where are they putting all these new robots? Are they running out of room for new Chipotles? I feel like there's one on every corner already. Is there any growth left in the U.S.?
You'd think they were saturated, but not yet. They actually just hit a major milestone in December 2025. They opened their 4,000th restaurant.
4,000? Wow. Where was it?
Manhattan, Kansas.
The Little Apple. Okay, but how many more can they actually build?
The goal is 7,000 restaurants in North America. They think they can almost double their current footprint.
That seems incredibly ambitious. Where are they going to put them?
It's not just about where, it's about what kind. For 2026, the plan is to open 350 to 370 new locations. And here's the smart part. 80% of them will be Chipotlanes.
Chipotlanes, just drive-thrus.
Drive-through pickup only. You order on the app, you drive up, you grab it through a window, you leave. Think about the economics of that. No dining room to clean, no bathrooms to maintain, smaller real estate footprint. These units have significantly better margins.
So they are optimizing the real estate too.
Sure.
But it's not just North America anymore, right?
Yeah.
I saw some interesting countries on the expansion list.
They are finally pushing global expansion aggressively. They've been slow on this compared to a McDonald's or Starbucks. But they have their first partner-operated locations in Kuwait with the Al Shaya Group. And in 2026, they are entering Mexico, South Korea, and Singapore.
Hold on. Entering Mexico. That seems bold. Bringing an American Mexican grill to Mexico. Isn't that like trying to sell ice to an Eskimo? Or pizza to Naples?
It is the ultimate stress test, isn't it? There is a huge risk there that it's seen as inauthentic or overpriced compared to actual local street food. But, brands like Starbucks have succeeded in Italy.
True.
It's about the brand cachet, not just the food.
And what about Asia, South Korea, and Singapore?
Huge opportunities, but also risky. The Asian market loves American fast casual brands, but the build-your-own concept can be tricky in cultures used to set menus. However, if they can crack that code, the growth runway resets completely.
So bringing it all back to the immediate future, we have the earnings call on February 3rd. What should we be listening for?
The Q4 numbers will be interesting. Expectations are for earnings per share of about 24 cents, which is actually down 4% year over year. Revenue should be around $3 billion.
But if the stock is up, does that mean people are ignoring the Q4 dip?
They are looking past it.
Yeah.
The key is the guidance for 2026. Wall Street wants to know if the honey chicken and the heat pack equipment are actually turning the tide on traffic. Can they promise a return to mid-single-digit sales growth?
So it's a game of expectations.
Exactly. If they guide for positive traffic, the stock rally continues. If they say traffic is still negative, that $40 price might not hold. They need to prove the strategy is working now.
So let's wrap this up. It feels like Chipotle is in a transition year. They took a beating in 2025, lost their celebrity CEO, and got hit by inflation. But they are fighting back with everything they have. Robots, new sauces, faster grills, and a new CEO who knows the operations inside and out.
It's a prove-it year.
Yeah.
The recovery signs are there, but they have to execute flawlessly on the tech and the menu to offset the economic pressure on their customers.
And one thing you mentioned earlier really stuck with me, the idea that they are becoming a tech-enabled manufacturer.
That's the thought I want to leave you with. Chipotle is betting the house that automation can save their margins in an inflationary world. If the avocado and those automated make lines work, they aren't just a burrito company anymore. They become a tech powerhouse with a food front end. But if the tech fails or gets delayed and inflation sticks around, can a $15 burrito survive a recession? That is the massive gamble they are taking.
It's definitely something to think about next time you see a robot peeling your avocado. And with that, we come to the end of this deep dive today. We hope you liked it, that you learned something new, and that you will join us in the next one.
Absolutely. Thanks for listening.
Thank you very much, and we will meet again very soon. Remember that the PayPal link is in the description if you want to help us. Thanks once again. Cheers.